Okay, let's go. Can you hear me? Can you see me, guys? Hey, guys, please confirm if you can see me live. Give your present by showing a small like. Come on. Sure, we are live. Just give me 2 minutes. Yes, just give me 2 minutes. Yes. Okay. Online students, please confirm. Can you hear me? Can you see me? Okay, loud and clear, everyone. Sure. Then time to get started. Hi, Prithvi. बस बढ़िया देख वहां से निकल के यहाँ पे पहुंच गए. All right, all right, all right. Sure. Okay, then namaste, adab, sat sri akal. This is CA Sankalp Kanstiya, welcoming each one of you in this amazing session on Advanced Financial Management Full English Batch. Are you all ready to learn something new? Then let the game begin. All right, guys. So, thank you, bhai. Sure. So now, guys, the most important thing that we are going to start today is in mutual funds. Yesterday, we had a small session, and in that small session, we did advanced financial management. We understood what are the topics, total 15 topics that we are going to study in this chapter, so to say, in this subject. Then we understood about the paper pattern. Then we finally started with mutual funds. And when we started with the mutual funds, we had a small example, right? The example was that all of you assemble together, invest some money in our mutual fund, and that mutual fund grows at the rate of 11.6%. 1 lakh invested becomes 1,11,600 in a span of 6 months. And obviously, that is the reason you invested in this fund, right? Sure. Okay. Now we will take things forward. Just remember one thing, that the basic terminologies are clear. First basic terminology is what is mutual funds, pool of public surplus money invested with a professional portfolio manager for a stipulated fees. Okay. NFO is basically your new fund offer. Whenever a new fund comes, it is launched through the NFO. AUM, asset under management, the market value of all the investments of the mutual fund. What mutual fund issues is called as units, and the purchaser of units is basically called as a unit holder. Okay, sure. So far so good. Sure. Now, okay, we also understood something called as open-ended and closed-ended fund. Open-ended fund are you can invest anytime, anywhere in this fund directly with the mutual fund company. Whereas the closed ended fund, you will have to invest directly through stock market at market price. Now, if you observe the last line of this question, then you will see that, yeah, if you see the last line of the question, then you will see that buying and selling of open ended mutual funds is at NAV per unit. And our full focus today, guys, is going to be on this concept, which is NAV per unit. We all know that 95, what 98% of the mutual funds are open ended, and all open ended funds are traded at NAV per unit. Sure, let's start now and understand what exactly is NAV per unit and take our today's session forward. Guys, let me first affirm that all of you, can you hear me properly? Can you see me properly? And the second most important thing, whatever was taught yesterday, are you all thoroughly clear so that we can now build up upon the things today? Okay, so please confirm, guys. Yes, great. So I will start with an example. Okay, so yesterday was launch of NFO of AI mutual fund. All right. This NFO was launched at the rate rupees 10 per unit. Right? Right, sir. We also confirmed that this is a open-ended. We usually write OE. This is a open-ended mutual fund. This is a this is a open ended mutual fund. Now, when I say open ended fund, mutual fund, buying and selling anytime directly through the mutual fund company at the rate NAV per unit. Now, what exactly is this NAV per unit? Chalo, let's try and understand. See here. Say yesterday was 1st of June. Okay. All of you purchased the units at the rate 10 per unit. Okay. I got total in all, yeah, in all there were say 10 lakh units I sold yesterday, and in all rupees 100 lakhs was collected by the AI mutual fund. Rupees 100 lakhs was collected by the AI mutual fund. Now pay attention. We invested, this AI mutual fund invested in equity shares, okay, worth rupees say, chalo. So what they did is this, huh? Pay attention. Huh? I want a CIO. I want a CIO from any one of y'all. Who will be the CIO? Whoever says me first will become my CIO. What is a CIO? CIO is basically the chief investment officer of this mutual fund company. So who amongst y'all will be the CIO of this AI mutual fund? Come on, bolo bolo, tell. Yes. Okay, it is Shio-chan. Shio-chan, can I say your name is Dilip? So, Mr. Dilip will be our first CIO. So, Dilip will be our first CIO. What is a CIO? He is the Chief Investment Officer. Now, Mr. Chief Investment Officer, rupees 1 crore is there in your bank account. I mean, in AI Mutual Fund's bank account. Tell me, what are you going to do? Where are you going to invest? So, Dilip says that, sir, I am very clear. I want to invest in the equity shares of the company. I just want to invest in the equity shares. I don't want to get into the traditional investments of debt and FD and everything. I'm like, okay, done, no problem. So on 1st June, as soon as Dilip receives money, what he does is he invests 500, he takes 500 shares at the rate rupees 1500 per share. Okay. Tell me, 5,000 shares at the rate 1,500 per share. Tell me what is the amount that he has invested. And he invests in the shares of MRF, Madras Rubber Foundation. Right? So he invests in the 5,000 shares at the rate 1,500. Can anybody tell me the amount, please? All right. So how much is the amount that he had invested there? Correct. It is 75 lakhs, everyone. Correct. So 75 lakh. is what he has invested in MRF. Okay, then again on 1st June, he invests in 200 shares at the rate rupees 2000 shares, and yeah, and one share is rupees 1250. He invests in 2000 shares at the rate rupees 1250 per share. This time he invests in Infosys. Okay, so what is the amount? 25 lakhs. What is the amount? 25 lakhs. So in all, can I say total 100 lakhs, guys? Hey guys, total, can I say 100 lakhs, everybody? Sure. Everybody is clear till here. Have you guys written also whatever has been dictated? Done. Now what happens is this. On 15th of June, okay. So also one more information. Also one more information that say on 1st June, there were 10 lakh units, right? Of these 10 lakh units, one of the person who had invested, you can just write down below also, that's fine. One of the person who had invested in our AI mutual fund was, yes, it is say Ajay Vignesh. Ajay had purchased, guys, 10,000 units. Am I right, Ajay? So Ajay had purchased 10,000 units at the rate rupees 10 per unit, amongst others. Others, obviously, 10 per unit, 10 lakh units were purchased. 1 crore rupees was there in the bank account of Mr. Dilip. And from that 1 crore, he purchased MRF shares 5,000 and Infosys shares 2,000. Okay, sure. Now, when did Ajay purchase this? He purchased this on 1st of June. He purchased this on 1st of June. Now see what happens here. Today, say, is 15th of June. On 15th of June, now Mr. Dilip, you have to answer. The MRF shares, which you have in total 5,000 shares, the price of that share, the market price per share MPS means of these shares is now rupees 1,800 per share. And Infosys shares that you have 2,000 shares is now the market price per share is 2,200 per share. Is 2,200 per share. Tell me what is the total value of the shares. Tell me what is the total value of the shares. Now, can I say 5,000 into 1,800? Come on, Mr. Dilip, I'm waiting. You are my CIO. Yes. Can I say now this is 90 lakh rupees? Done? Done. Then 2000 into 2200 and this is 44 lakh rupees. Tell me what is the total amount. Tell me what is the total amount or what is the market value of investments of this company. 44 lakh plus 90 lakhs. Can I say it is now 1 crore 34 lakh here as such? Everybody, yes? 134 lakhs, absolutely correct. Now also tell me one more thing. How many units are there with us? Can I say with us there are 10 lakh units? So I divide this by 10 lakh units. Tell me now what is the value? So can I say 134 lakhs divided by 10 lakh? Correct. The answer is rupees 13.4. Guys, what is this 13.4? This is called as NAV per unit. This is called as NAV per unit. Now, suppose on 15th of June, now, suppose on 15th of June, Ajay comes and tells that he wants to sell. Ajay comes and tells he wants to sell 5,000 units. He wants to sell 5,000 units. What is the amount that he will get? What is the amount that he will get? Correct. If he comes on 15th June, we will tell him you will get 5,000 at the rate rupees 13.4, because now buying and selling will happen at the rate NAV, which will be rupees 67,000, which will be rupees 67,000. And suppose on say 15th of June itself, say on 15th of June, Mr. Satya comes and tells that he wants to buy, he wants to buy 1,000 units. Tell me, we will sell him at what price? Correct. That will also happen at the NAV per unit. 13,400 rupees is what he will give us, and we will give him 1,000 units. Are we understanding, everybody? Bolo bolo tell. Okay, correct. So, so are we clear now what is NAV per unit? The price per unit, the market price per unit, or not, let's not use the word market price, the real price per unit of mutual fund is basically NAV per unit. How is it calculated? If you observed, what we did was we calculated the market value of investments. This market value of investments divided by the number of units. Market value of investments divided by the number of units outstanding, ladies and gentlemen, will give us NAV per unit, will give us NAV per unit. Gotcha, everybody. Chalo. So on that note, we will quickly write down what exactly is NAV per unit. Can I say this is going to be our concept number 3? See, concept number 2 was structure of mutual fund. And now we will move on to the concept number 3, and that is NAV per unit. Right, everyone? Are you clear, guys, with the example? Everybody is clear with the example? How did this all work out? Perfect. Yeah, this is how practically things work. Well done, CIO Mr. Dilip. Now, write down NAV per unit. What is NAV? It is net asset value per unit. It is net asset value per unit. So we will write down what is NAV. NAV for us is, everybody write down, price at which price at which price at which open-ended mutual fund units are brought and sold from mutual fund company. From mutual fund company. Okay. You can also write here, this basically represents value slash price of 1 unit of mutual fund company, of 1 unit of mutual fund company. Okay, so done, 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 done. Hmm. Sure. Just a moment. Okay. Done, 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 sir. Okay, okay, okay. Sure. Sure. Now we will write down a comprehensive calculation of NAV per unit. Write down comprehensive calculation of NAV per unit. Comprehensive calculation of NAV per unit. Okay. You can say the formula for NAV per unit. This is basically the formula for NAV per unit. Sure. And we will write here NAV per unit is equal to, write down guys, NAV per unit is equal to market value of investment, market value of investments divided by outstanding number of units, divided by outstanding number of units. Sure. Let's see what is the market value of investment. So when we talk about investments here, we are speaking of what all things? Let's see. First, it could be an investment in equity shares. So if it is the case, we just saw right now, MRF, we had to convert that into market price. Infosys, we had to convert that into market price. So whatever equity shares are there, when we are calculating the NAV per unit, we will be taking the market value of those shares that we have purchased as a mutual fund company. Gotcha? So equity shares, we will write here market value of equity share. Market value of equity shares plus equity dividend, if any, accrued or received, if any, accrued or received. Second, debentures or bonds or debentures. So what will that be? Market value of bonds plus, what do we get from the bonds or debentures? Correct. The interest part. Right. So write down interest on debentures or bonds. Okay, guys. Then what else? Suppose if your mutual fund invests in real estate, then so third, market value of real estate, if any investment done in real estate, plus rental income, right? Done, guys? Okay. Plus, fourth point, any other, yeah, any other investment and its income. Any other investment and its income. Plus, a very important factor called as the cash balance. Called as the cash balance. Okay. So all of this together will become your gross asset value. Will become your gross asset value. Less. See, we don't want the gross, we need the net asset value. So less expenses incurred to run a mutual fund company. Expenses incurred to run a mutual fund company, less any other outstanding expenses. All of this subtracted, guys, will give us the net asset value. Will give us the net asset value. Okay. Please copy. Okay. Okay. Now this net asset value divided by outstanding number of units, outstanding number of units will give us the final NAV per unit. Will give us final NAV per unit. Uh-huh. So how do you calculate the outstanding number of units? Original number of units issued in NFO plus units issued less units redeemed. This together will be your NAV per unit. This together will give you correct NAV per unit. Got it, everybody? Chalo. On that note, now, guys, we are all set to start with our first question of the day. Please open optimized book. Please open optimized book and we will start with question number 1. Come on. Yes, here you go. I hope everybody has the book, right, guys? So please open question number 1 and let's start. Okay. The portfolio details of a fund. The portfolio, following portfolio of a fund are available. Stock A, B, C, D. Shares 2 lakh, 3 lakh, 4 lakh, 6 lakh. Price 35, 40, 20, 25. The fund has accrued management fees with portfolio manager totaling to rupees 30,000. There are 40 lakh units outstanding. What is the NAV of the fund? If the fund is sold without a load, what is the sale price? So in short, we have to calculate the NAV per unit. There is no load without a load. Load means commission. So what will be the price? Tell me. Chalo guys, let's start. Question number 1, solution. Okay. How many stocks do we have? Can I say 4 stocks? First, always write down the formula. What we have to calculate here? We have to calculate the NAV per unit. So we will write here NAV per unit is equal to market value of all investments plus cash less accrued expenses or outstanding expenses. All of this together is your net asset value divided by the outstanding units will give me my NAV per unit. Sir, we have to write this in the examination always. Always have the habit of writing the formulas in the examinations wherever you know it. Wherever you know it. Okay? Sure. Now, let's try to do the calculations. Chalo, let's try to do the calculations. So now we have 4 shares. What are the 4 shares that we have? So we will write here shares. Okay. What are the 4 shares that we have? We have A, B, C, D. A, B, C, D. Okay. Then how many number of shares do we have, guys? So we will write here 2 lakh, 3 lakh, 4 lakh, 6 lakh. So 2 lakh, 3 lakh, 4 lakh and 6 lakh. And then we have market price per share. What is the market price per share? 35, 40, 20, 25. So we will write here 35, 40, 20 and 25. Tell me what we will get. Correct. We will get the market value of investments. We will get the market value of investments. What is going to be the market value of investments? So it will be 2 lakh into 35, 70 lakhs. 3 lakh into 40, 1 crore 20 lakhs. 4 lakh into 20, 80 lakhs. And 6 lakh into 25, 1 crore 50 lakhs. Okay, tell me the market value of investments will become how much? Correct. When you add all of them, so market value of all investments will work out to how much? Correct. 4 crore 20 lakhs. Correct. Please ensure that proper formatting and everything presentation is done. Directly doing it will harm you later on. Less we have the accrued expenses, which is very clearly given to be 30,000. So we will just reduce this 30,000. And finally, we will get the total NAV. Woo! Yes. So the total NAV is 4 crore 19 lakh 70,000. So total NAV 4 crore 19 lakh 70,000 divided by outstanding units, which is 30,000, which is 30,000. And finally, we will get the NAV per unit. Did you all get 10 point? Yes, 4925 per unit. 10.4925 per unit. Gotcha, everybody? Yes. Done, 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 done. Okay? Yes. Divide by, oh, sorry, 40 lakh units. What did I do? In my mind, it was 40 lakh. But when I wrote, I by mistake wrote the 30,000 outstanding expenses. Very good. चलो. So ये आ गया मेरा. I have got the NAV per unit. Now, 2 points to be noted here. Guys, all of you have also written this. All of you have also written this. 2 points to be noted here. Ask me what? First point that is to be noted here is that whenever you are writing NAV per unit, write 4 decimals. And the other is the number of units whenever you are writing, denote it with 2 decimals. I think I'll dictate that to you. Chalo. Write down note NAV per unit Hey guys, can you hear me now? Okay, there was some technical glitch, maybe. Yeah. Okay, now see, I told you, NAV per unit should always be in 4 decimals. And units should always be in 2 decimals. So suppose now I have 10 lakh rupees and want to invest in AI mutual fund whose NAV per unit is as per 4910 per 4925 per unit. Tell me how many units will I get? Bolo bolo tell. So now I will do the calculation. Therefore, number of units that I will get is rupees 10 lakh divided by 10.4925 per unit, which is equal to 95306.17 units. Got it, everybody? Done. Sir, can we get decimal unit mutual fund in real life? Yes, absolutely yes. See, in India, you do not get shares in decimals. Shares are always in whole numbers, round numbers, whole numbers. But as far as units are concerned, you will get units in decimals as well. If you go outside India in USA, the shares are also available in decimals. In fractions also shares are available. All right, guys? Chalo. So far, so good. So what did we conclude here, guys? So our conclusion is throughout the chapter now, for NAV per unit, 4 decimals, and for number of units, correct, 2 decimals. Case, okay. Okay, now a homework to you guys, and that is question number 3 is your homework. Okay, please ensure to do it. Question number 3 will be your homework. Okay, done. Now we move on to a new concept, and the name of the concept is calculation of daily NAV of a mutual fund. Calculation of daily NAV of a mutual fund. Now, before we start with what exactly this is, I will give you a small example and also try and understand a few things, few practical things about the NAV. Okay, chalo, tell me, have you seen share market? The share market price of the share changes on a daily basis, on a minute to minute basis, on a second to second basis. Every second, the price of the share changes. Obviously, when the stock market is open. So, when the stock market is open, the share market price changes every alternate second. Does the same thing happen in mutual funds also? Does the NAV per unit change every second? What do you feel? The answer is no. It does not change every second, but it changes every day. So what happens practically is this. Listen to me, okay? Every evening, 3:30 p.m., the market closes down. By around 4 p.m., the CIO of the company, of the mutual fund company, Dilip, in our case, he accumulates all the market value, market price, closing prices of all the shares that we have invested in. And then using that data, by around 6:30 p.m., a new NAV is calculated and submitted to the stock market, which is then listed on the exchange. Now, that price will remain prevalent for the next 24 hours. Okay, got it? So again, next day, 24 hours, after 24 hours, a new NAV will be presented based on the closing price that was there yesterday. Got it? Sir, can you please share PDF book not received? Yeah, sure. I'll share the PDF. Yes, for sure, I'll share the PDF. Okay. Sure. Where do I share? Do I share it in the? Okay, I'll share it in our group itself. No? Yes. Oh oh, I've shared the wrong thing. Wait, I'll share you this PDF. Just a moment, huh, guys? I'll just share this PDF. Huh. So, as far as mutual fund units are concerned, the NAV changes not on a second to second, but on a daily basis. Come, I'll just dictate a few things about this to you all. So, Ajay, I have shared the PDF. You will get that PDF in 5 minutes. Okay? Okay. Sure. Sure. We'll write down first. You also write down, guys. What happens practically, you should know. So, right. Practically, hmm, NAV per unit is calculated practically. NAV per unit is calculated on daily basis based on closing market price of shares. Okay. The prevalent NAV per unit calculated above will remain for the next whole day. Okay. Chalo. Now, who will be my next CIO after Dilip? I want another CIO for my new example. Another classic example is what now I'm going to come up with. Yes, tell me. Who is the CIO of our AIFE mutual fund? Yes, come on. Okay, let Krishna Chaitanya. Okay, so let Krishna Chaitanya be the CIO. We'll call him Krishna. Okay, Mr. Krishna is the CIO of AIFE Mutual Fund. Now, this is what has happened throughout the whole day, and you have to answer. CIO, Mr. CIO, you are the person who is actually responsible to answer this question on behalf of the whole mutual fund unit. Others can do the calculation, but final answer will be given by our Mr. CIO Krishna itself. Okay, chalo, let's start. Let's begin. 1st Feb, closing NAV per unit is equal to rupees 15 per unit. Is equal to rupees 15 per unit on 1st Feb. Okay. Uh, Outstanding units on that day, outstanding units on that day is 2 lakh units. Outstanding units on that day is 2 lakh units. Closure. Now, on 2nd Feb, on 2nd Feb, morning, say 9:30 a.m. Morning 9:30 a.m. What happens is, say, Vaishnavi comes in the office and tells, I want to purchase, Vaishnavi comes and tells, I want to purchase 80,000 units of AI mutual fund. 80,000 units of AI mutual fund. Okay, fair enough. Then, on 2nd Feb afternoon, Asad, Muhammad Asad comes and tells, I want to sell, I want to sell 30,000 units of AI mutual fund. This happens at what time? 12:30 p.m. Okay, sir, done. Then, again on 2nd Feb at 2 p.m. Okay, at 2 p.m. AI mutual fund receives dividend of rupees, receives dividend of rupees 1,50,000. Okay, fair enough. Again, on 2nd Feb at 3:15 p.m., on 2nd Feb 3:15 p.m., mutual fund portfolio, which consists of equity shares, has a appreciation of rupees 5 lakh. Come on. All of you guys, all of you guys have to calculate. All of you guys have to calculate NAV as on 2nd Feb at 6 p.m. Will you be able to do it, guys? Will you be able to do it? Come on, your time starts now. All of you have to do the calculations and give it to Krishna. Krishna will give me my final answer. He is the CIO, so he is the person responsible for giving me the final answer. Come on, others. Do the calculation on your calculators. Okay, Mohammed Sharif has given the answer. According to him, it is very good. Others, give it a try. Okay, the CIO has given the answer, and according to him, it is 17.6. Let's try and find out what exactly is the answer with our quick calculation. Chalo, are you all ready? Chalo, let's start. So, we will start with the solution. We will start with the solution. So, right there, calculation of NAV as on 2nd Feb. Calculation of NAV as on 2nd Feb. Sure. Let's start. Let's go. As long as I can get online, I'm happy to go wherever. Okay. Now it all started on 1st Feb. 1st Feb, the market value of investments or the closing net asset value of the mutual fund was 2 lakh units into 15 per unit, which is 30 lakhs. So, chalo, quickly write down 1st Feb. Now, you guys also write down the answer with me, huh? Please. So, 1st Feb, we will write what is the total NAV as on 1st Feb. So, we will write here that in all 2 lakh units at the rate rupees 15 per unit. कितना होता है? Correct. It will be 30 lakhs. So my closing NAV is 30 lakhs. My closing NAV is 30 lakhs. Okay. Now, what happened on 2nd Feb? On 2nd Feb, Vaishnavi came to our office and she said that I want 80,000 units of AI mutual fund. What will we say? We will say, okay, Vaishnavi, if you want 80,000 units of mutual fund, we will give it to you. But you need to pay us money. How much money will Vaishnavi pay? She will pay as per the last NAV, which is 15 per unit. She will pay as per the last NAV, which is 15 per unit. So now what happens is on 2nd Feb, as soon as Vaishnavi comes on 2nd Feb, as soon as Vaishnavi comes, we will say cash received on issue of 80,000 units, right? And how much is the cash received by us? It is 15 per unit. So 80,000 into 15 is how much? Correct. It is 12 lakhs. It is 12 lakhs. So 80,000 into 15 is 12 lakhs. Done. Okay, then moving on. On 2nd Feb afternoon, Asad comes And Asad tells that I want to sell 30,000 units. If he is going to sell the 30,000 units, can I say we will repurchase? We as mutual fund company will repurchase the units. But in turn, we will have to give them money. If we have to give him money, can I say cash will go out from us? So we will write here on 2nd Feb. We will write here on 2nd Feb. What happens? Correct. Cash paid on redemption. Cash paid on redemption. How much? So 30,000 units at the rate 15 per unit, and it is 4,50,000. And it is 4,50,000 is what we have paid. So cash will go from our hand. Again comes 2nd Feb. What happens? AI mutual fund receives dividend. So if it has received dividend, can I say it will be added to our NAV? So add dividend received. Add dividend received. How much is the dividend received, guys? Correct. 1,50,000. 1,50,000. Done. And finally, they have said that portfolio has a appreciation of 5 lakh rupees. So if it has an appreciation, so can I say it will increase the NAV? So we will write here 2nd Feb, again portfolio appreciation. How much is the portfolio appreciation, ladies and gentlemen? Correct. It is 5 lakh. So we will add 5 lakh rupees here. And now, can I say we are all set to see the total NAV as on 2nd Feb? So we will write here NAV as on 2nd Feb. NAV as on 2nd Feb. Tell me how much is the NAV? Right. It will be how much? 44 lakh rupees. Please somebody confirm. Will it be 44 lakh rupees? All right. Divide by outstanding units. Tell me. Tell me how many outstanding units? So we will say that initially we had 2 lakh units. Initially we had 2 lakh units. Then Vaishnavi purchased 80,000 units. So it all became 2 lakh 80,000 units. Less Asad redeemed 30,000 units. So less 30,000. So can I say 2 lakh 50,000 units is what we will be left with? How? So we will write here 2 lakh 80,000 units, right? Sorry, 2 lakh units, 2 lakh units plus 80,000 units for Vaishnavi, of which 50,000 has been received, 30,000 has been redeemed by Asad. So less 30,000 units. I will finally get 2 lakh 50,000 units. I will finally get 2 lakh 50,000 units. And eventually, what will be my NAV per unit? Ladies and gentlemen, what will be my NAV per unit? Correct. It will be rupees 17.6 per unit. Are we clear, everybody? Will you please take 2 minutes and quickly copy down? Chalo. Gotcha, everybody? Done. Did you understand the whole working? Any doubts, anyone? Perfect. Now, can we write this as a formula, as a format? Can we write this as a formula, as a format, everyone? Yes. So what will be the formula, or so to say the format? Chalo, let's write down calculation of NAV. We will write here calculation of NAV when daily info is given. When daily info is given. When daily info is given. Sure, we'll start. We'll start. First, opening. Can I say we started with the opening NAV? Correct? This total NAV, this is your opening NAV, guys. This is basically your opening NAV. What was your opening NAV? 30 lakh. So we'll write here opening NAV. Yes. And that is how much? Yesterday's NAV per unit into number of units. Yesterday's NAV per unit into, correct, outstanding unit. So write down yesterday's NAV per unit into outstanding units. Then plus. Now what happened? Vaishnavi came and we received the cash on issue of units. So we will write here money or cash received on issue of units. Money or cash received on issue of units. Okay. Then what happened? Asset came and we had to pay cash. So we will write here cash paid on redemption of units. Cash paid on redemption of units. Okay. Then what happened? We received dividend and there was a portfolio appreciation. So we will write here add any kind of dividend, interest, or other income received during the day. Received during the day. Right? Right, sir. Then any portfolio appreciation or depreciation as the case may be. Portfolio appreciation or depreciation during the day. Okay. And finally, if any other expense which has happened during the day, so any expense incurred during the day, all of this together will give us the closing NAV. Will give us the closing NAV. Obviously, divided by the outstanding number of units How do you calculate the outstanding number of units, guys? So original units plus if any units issued less units redeemed. This is your outstanding number of units. And finally, we will get NAV per unit. Finally, we will get the NAV per unit. Gotcha, everybody? Done, done, and done. Chalo. So this is going to be the format whenever daily NAV info is given. Done, sir, done, sir, done. Now come to question number 2 from the book and let's try to solve that question. Now let's start with question number 2 from the book and we will try to solve that question. Come on. Sure. Question number 2. Come to question number 2, guys. Again, a very nice question. Here we go. Calculate the today's NAV of Flexi Fund if the following details are given. Yesterday's NAV per unit 12.87. Total number of outstanding units 1.25 crores. Face value 10. Expenses 1 lakh. Assume sales NAV and repurchase NAV to be 12.87. Appreciation of portfolio, fresh subscription, units redemption, and dividend received. Sure. Let's start, guys. So, see here. Oh, just a moment. So, see here. We have to calculate the today's NAV of Flexi Fund for the following details. Yesterday's NAV is given. How much is yesterday's NAV? 12.87. And how much are the outstanding number of units? 1.25 crores. Can I say we will easily be able to calculate the yesterday's total NAV and that will be the start point for our sum. That will be the start point for our sum. Chalo, let's write out. Question number 2, solution. Opening NAV. Okay. What is going to be the opening NAV? Yesterday's NAV per unit. Can I say which is 12.87 per unit? Multiply by how many units are outstanding? 1.25 crore units. So 1.25 crore units, which will work out to 1 crore 25 lakhs into 12.87 and it is 16 crore 8 lakh 75,000. 16 crore 8 lakh 75,000. Gotcha? Done. Then add. What will we add? Correct. Cash received. How much is the cash received, guys? See here. Total units fresh subscription is 2 lakhs. So 2 lakhs fresh subscription. And here it is very clearly mentioned that sales, NAV and repurchase to be at 12.87. So if we are selling the units, which is fresh subscription, we are selling the units, that will happen at 12.87. So 2 lakh units into 12.87 is the cash received. Right now. So cash received on issue of units. So 2 lakh units into 12.87. Correct. It will be 25 lakh 74,000. It will be 25 lakh 74,000. Okay. Chal. Next. Can I say units redeemed? So, how much are the units redeemed? 0.75 lakhs. At the rate 12.87. So, we will do less cash paid on redemption. How much? 2 lakh units into, again, buying and selling is at 12.87. So, 2 lakh. No, this is 75,000. Sorry. So, 75,000 units at 12.87. So this will be 965 250. 965 250. So this is done. This is done. Okay. Dividend received is how much? 1 lakh. Uh, Dividends received is 1 lakh. Okay. Then appreciation of portfolio is 12 lakhs. Very nice. Add portfolio appreciation. How much is the portfolio appreciation, guys? Correct, 12 lakh. And then, yes, there is also a expense of 1 lakh rupees. So what I will do is, I will reduce expenses. Gotcha, everybody? How much expenses will I reduce? 1 lakh, because that is what has happened in that day. I will get the gross NAV. I will get the gross asset value, gap, correct? So I will write here. Okay, this is after expenses. So this is rather my NAV, net asset value. How much? Correct. 1 crore 63 lakh. Yes. Okay. 16 crore 36 lakh 83,750. Awesome. And divide by outstanding units. And divided by outstanding units. How many outstanding units are there? So we will say that total 1.25 crores were there. 2 lakhs were added, 75,000 were reduced. So 1 crore 25 lakhs, 2 lakhs added, 75,000 reduced. Works out to how much? 1 crore 26 lakh 25,000 units. And finally, we will get our NAV per unit. 163,683,750 divided by 1 crore 26 lakh 25,000. And it will be 12.9650. Done. With this, the whole concept first explained to you with an example. Then we wrote down the whole format, so to say the formula, and then the practical solving of this question of the book. Any doubts, anyone? Sure. Great. Sure. Okay, great. Now we move on to our another new concept of the day, and that, ladies and gentlemen, is concept number 5, and that is based on closed ended funds. If you remember, the structure of mutual fund has two type of mutual funds. One is open ended mutual fund, correct, and the other is closed ended mutual fund, right? So chalo, let's write down the next part or the next concept, and that is closed ended fund. Closed ended mutual fund. Okay, sure, let's start. See, we all know open ended funds, buying and selling happens at the rate NAV per unit. But for closed ended funds, buying and selling happens at market price per unit. So let's write down for open ended, purchase and sale of units is at NAV per unit. And for close ended, correct, purchase and sale of units is at market price per unit. Am I right, everybody? Yes, sir. So now, obviously, whenever we have to understand a concept, what is the approach that we take? We always do it with the help of example. Now I'm writing you an example. You have to give me the answer for that. You have to give me an answer for that. Now suppose if AIFE mutual funds, उज्जवल भाई आराम हराम है, काम करेंगे तो हमारे को एनर्जी मिलता है भाई. चलो, AIFE म्यूचुअल फंड इज अ क्लोज्ड एंडेड फंड. हाँ हाँ, AIFE म्यूचुअल फंड इज अ क्लोज्ड एंडेड फंड. नाउ सपोज NAV पर यूनिट है ₹12 पर यूनिट. ठीक है, 12 पर यूनिट. सपोज market price per unit is rupees 12.75 per unit. Okay. Now, I have a question for each one of you. If I want to buy or sell above mutual fund, then it will be at what price? Then it will be at what price? Bolo, bolo, tell. Then it will be at what price? Tell me. The answer is always the closed ended funds will be bought and sold. So if I want to buy and sell the closed ended funds, it will always be at the market price, which is 12.75 per unit. Gotcha, everybody? Chalo, write down answer. To which we will write down always closed ended fund buy and sell at market price. buy and sell at market price. That is rupees 12.75 per unit. That is rupees 12.75 per unit. Okay, done. Chalo. Okay, now we move on to example number 2. Are we clear with this? Chalo. Now we move on to another example. Just pay attention. Example number 2. And that is again related to closed-ended fund. Sure. So now there are two cases here. There are two cases here. Case 1 and case 2. Case 1, case 2. Sure. Now what is the case 1? NAV per unit is rupees 12. Market price per unit is rupees 14. Case 2. NAV per unit is rupees 12 and market price per unit is rupees 9. Tell me, what is happening here? See, ideally the correct price of this unit is 12. But in case of closed-ended funds, it doesn't matter what is the NAV. It is the market price at which it is traded. So if the NAV is 12, but the market price is 14, can we say that this fund is trading at a premium? 12 rupees thing as a market price of 14. Whereas in the second case, the NAV is 12, but that is trading at 9. Can we say it is trading at a discount? Got it, everybody? Chalo, chalo. Let's write down. So the first case, the units are issued at premium. We will write here units are being issued at premium. And case 2, units are issued at discount. Units are issued at discount. Got it? So, can we conclude that in a closed-ended fund, if units are issued at, suppose if the units are issued at, say, market price greater than NAV, so we say that the units are trading at premium. And if it is less than NAV, we will say the units are trading at discount. Units are trading at discount. Got it? See, always remember this comparison is with respect to the NAV. NAV is your base. On that NAV, it is decided whether premium or discount. If it is more than NAV, premium. Less than NAV, discount. So NAV is always the base. If you want, I'll just dictate that point to you. Write down note. Base is always NAV. Base is always NAV. Premium or discount is based on market price with respect to NAV. Market price with respect to NAV. Please copy, guys. Done? Okay. Sure. Now, the last example, and if you are clear with that example also, then we will be done with this concept of closed-ended fund. Chalo. Write down example number 3. Also try to answer the example or the question that I am giving. Suppose AIFE mutual fund, AIFE mutual fund, which is a closed-ended fund, has a NAV of rupees 20. Okay. And it is said that closed-ended fund is trading at premium of 30%. Tell me what is the market price? Tell me what is the market price. And on the flip side, there is a closed-ended fund which is trading at discount of 25%. Tell me what is the market price. Chal. Correct. So can I say the case 1, sir, will be rupees 26? The market price in case 1 will be 26. How? 20 is the NAV, sir. NAV is the base. 30% premium on that. So 20 is the NAV. NAV is the base. 25%, sir, discount on that. Sir, market price is equal to rupees 15. Gotcha, everybody. Bolo bolo tell. Done, sir. Okay, now we are all set to solve a question relating to the closed-ended fund. And the question is question number 6 from our book. Question number 6, everybody, from our Optimized. Here we go. Mr. Vivek purchased a 3-year closed-ended fund of Tata when the fund was launched at an opening offer price of 10 per unit. Since then, the units got listed on stock exchange. After a year, the NAV of the fund was 12.5. In closed-ended fund, are we concerned with the NAV? No, we need the market price. However, the units of the fund were trading at a discount of 25%. So on 12.5, there is a 25% discount. During the year, a dividend of 5% was also given. Okay. If Mr. Vivek sells the unit in exchange, would he have earned any return at all? Sure. Let's do the calculations. Question number 6, solution. Hmm. Sure. The question is relating to Mr. Vivek, who has a closed-ended fund wherein he has purchased units in NFO at the rate rupees 10 per unit, right? Now his units are trading after 1 year. So what has happened is, after 1 year, the units in which he has invested has a NAV of 12.5. But we are not concerned with the NAV. We want the market price. So they have given an additional information that 25% is the discount on NAV. So we will write here NAV at the rate rupees 12.5 per unit less discount at the rate 25 cent. So the market price will be 12.5. Yes. And it is 9.375 per unit. 9.375 per unit. Gotcha? Yes. So always remember, discount slash premium always calculated on NAV per unit. Okay. Then there is also a dividend. Then there is also a dividend. During the year, a dividend of 5% was given. Remember, dividend is calculated on face value. So we will write here mutual fund dividend. What is the dividend? 5% of face value. Face value is 10. So 10 into 5%, 0.5 per unit. So dividend is always calculated on face value. Now we have to calculate the returns for Mr. Vivek. Can we calculate it? Chalo, let's calculate. So calculation of, correct, returns. How will that happen? So we will say, what was the purchase price per unit? Sir, it was 10 per unit. Sir, it was 10 per unit. Okay. What is the current market price? Guys. What is the current market price? Correct. Current market price is rupees 9.375 per unit. Then what is the dividend per unit? Correct. Dividend per unit is 0.5 per unit. So 0.5 per unit. Finally, we will get the net return. What is the net return? Correct. It is minus 0.125 per unit. So percentage returns will be minus 0.125 upon investment of 10 into 100 it will be minus 1.25%. It's a loss. It's a loss. Got it? Done. Are we done, guys? Chalo. Next, another question on closed-ended fund, and that is going to be question number 7. Mr. V purchased a closed-ended fund with a NAV of 25 per unit. With a NAV of 25 per unit. For rupees 20. Then what is this 20? Purchased a closed-ended fund whose NAV is 25, but he purchased it for 20. Can I say market price is 20 or as such? Done. At the end of the year, the fund's NAV was rupees 27 and was selling at a 5% premium. It did not pay out dividend or capital gain during the year. How much was the OG return, original discount, and what was Mr. V's return? Chalo, let's do the calculation. Sure, let's start. See here. First, always write down the given info, guys. Always have the habit of writing down the given info. So, NAV is 25, market price is 20 per unit. So, we will write here NAV per unit is 25 and purchased at 20. So, purchase price rupees 20 per unit, which is at market price. Which is at market price. At the end of the year, the fund's NAV was rupees 27, selling at a premium of 5%. So after 1 year, what happened? NAV became 27. We are not concerned with that. We are concerned with, but at a selling at a premium of 5%, guys. So tell me, this works out to how much? Correct. So this will become the market price per unit after 1 year. It is how much? 28.35 per unit. So our investment of 20 is now 28.35. So therefore, returns is, we will say 28.35 minus 20 upon 20. What is this plus 0? No dividend. Right? No dividend. Last sum we had dividend. This sum no dividend is equal to 41.75%. Gotcha? Done. And the last part of the question is how much was the original discount? Okay. So original units of 25 were being sold at 20. So the discount was 20%, apparently, what we can see from here. So we'll just write down here that original discount. So discount is calculated on. So what is the difference between market price and NAV? upon base is always nav. Always remember, base is always nav. So, 20, it was being sold at 20, something which is worth 25. This the real worth is nav, but it is being sold at 20. Means it is being sold at discount of -5 over 25. This will become 20% discount. Got it, everybody? Done, 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 done. Are we understanding everything, guys? And on that note, question number 12 will also be your homework. So for today, two questions are your homework. Question number 3 and question number 12. Please confirm till now everything is clear. You've written everything. All well? Great. Any doubt? Feel free to ask. I've already shared my WhatsApp number. You can always WhatsApp me on that. Sure. Done, 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 done. Okay. Time up. Good number of sums done. Sure. Okay. Good night. Time for me to say hasta la vista. Keep smiling. Thank you so much. Take care. Bye bye. Tomorrow, same time, same place. See you all. Okay. Notes, I'll share it in the WhatsApp group that we have. And yeah. Bye bye. Thank you. So please, running notes. Yeah. Notes I'm sharing. But please have the habit of writing the notes along with me. That will be beneficial. Otherwise, unnecessarily your notes will be at a lag. Yeah. So yeah, the notes are shared. Bye. Thank you. Good night. And yes, let me know anything else that you would need in the comment. We'll be happy to help.